Hey everybody, welcome back to TCB for another TCB short. For the short today, we're going to be tackling the question, is Bitcoin a Ponzi scheme? So you hear this a lot. Bitcoin is a Ponzi scheme. That's the headline. That's what they want you to believe. But what if that's backwards? What if Bitcoin isn't the Ponzi? What if the current fiat monetary system that we're living in is actually the Ponzi scheme? So let's define what a Ponzi scheme is. A Ponzi scheme, named after the notorious grifter Charles Ponzi in the 1920s, has five core characteristics. So they have a central operator that controls the scheme. There's explicit or implied promises of returns. The returns are paid using new investor money. So the new investors pay for the old investors' returns. There's a lack of transparency. You can't verify what's real or what's going on in the scheme. And there's mathematical dependence on constant inflows. So you constantly have to have money coming in. So in simple terms, the Ponzi scheme is where old investors get paid with the new money from new investors. It requires constant inflows of new investors for this to happen. And if those inflows stop, the scheme collapses. So that's the key. It must grow forever or die. So in that light, thinking through those kind of core characteristics of what a Ponzi scheme is, let's talk about the modern monetary system. Governments now run permanent deficits. The debt keeps expanding endlessly. And how do they sustain it? They issue new debt to pay off the old debt. So if the demand for that debt weakens, central banks step in and they create money out of nothing and they buy the debt themselves. So it requires constant inflows for the system to survive. So does that sound familiar? And that's not a bug. That's the actual system, how it's designed to operate at present. So let's break it down. Why does that resemble a Ponzi scheme? As we said, it requires constant inflows, new money, new credit, new buyers of government bonds. If the demand slows, the central bank has to step in and print because they need the new money coming in at all times. The old debt obligations are paid with new money. So the maturing debt in the government system is not paid off. It's rolled over, it's refinanced, and the debt is always expanded. It's not repayment, it's continuation of a system that needs to grow or die. So this system depends on belief. Confidence is everything. Confidence in fiat currency is the foundation. And once that confidence cracks, everything cracks. If you lose that confidence, the entire system breaks down. This government system redistributes wealth to insiders. So those closest to this money creation, governments, banks, and asset holders, they benefit first. Everyone else pays through inflation. So your savings get diluted to keep the system alive. Every time they create new money, your savings gets diluted and debased. Your dollar buys less every single year. Assets are inflating out of reach if anybody's looked at housing prices as of late. And the wages always lag behind. They're never able to keep up with the price increases. So when we try to save, we're not really investing. We're just running on a extraction treadmill that's designed to never stop. We're supposed to just keep working and getting debased away into perpetuity. So let's contrast that with Bitcoin. Put the same test on Bitcoin as far as these Ponzi characteristics. A central operator. No. No CEO, no company, no central control point in Bitcoin. It's a decentralized network. Is it promising returns? None. There's no yield in Bitcoin. There's no guarantees. There's no payouts. You have to pay old investors with new investor money. There's no mechanism for this in Bitcoin. There's no fund manager distributing any kind of Bitcoin returns from the new investors to the old investors. A lack of transparency. It's completely the opposite in Bitcoin. It's the most transparent financial system, in fact, that's ever been created. All transactions are visible on the Bitcoin blockchain. It requires constant inflows to survive. No. So the price depends on the demand for Bitcoin. Yes, it's a supply demand play as far as pricing is concerned, but the network itself, it keeps running regardless of price. The network is just mathematics. It's going to continue to operate regardless of what the price of a Bitcoin is. It does not care. So it does not require constant inflows to survive. So to summarize, in Bitcoin, there's no central operator. There's no promises of returns. There's no ability to print more Bitcoin. There's only a fixed supply of 21 million coins. No one can dilute you. No one can change the rules. And most importantly, it does not require endless inflows to survive. So the price might go up, the price might go down, but the system itself will keep running. So if you look at the critical distinction here, a real Ponzi scheme must expand forever, it must attract new money, and it collapses if the growth ever stops. In Bitcoin, it doesn't promise growth. It doesn't require new participants. It doesn't collapse if demand slows. It doesn't owe anyone anything. So it might reprice lower, but it won't break. It's a critical difference. So if we kind of zoom out and look at our current financial system that we've normalized, there's an uncomfortable truth here. We've normalized a system where money supply expands endlessly, savings are diluted endlessly, and the debt must grow forever. And we've chosen to call that system stable. But anything that must grow forever or fail sounds an awful lot like a Ponzi scheme. So when someone says Bitcoin is a Ponzi scheme, now you know the definition of a Ponzi scheme. And more importantly, you know how to test it. So Bitcoin meets none of the criteria of a Ponzi scheme. So if anybody ever tells you that Bitcoin is a Ponzi scheme, ask them this: what system requires infinite growth, constant new money, and silently taxes everyone through inflation just to survive? Because it's not Bitcoin. Bitcoin isn't promising you returns. It's offering you an exit, not from risk per se, but from a system that, like a Ponzi, only works until it doesn't. So I hope that helps y'all. Take care till next time, and we'll see you.